Stocks stage a rebound after yesterday's sell-off. The outcome of the US FOMC meet today and the Indian interim budget tomorrow remain the key monitorables. Healthcare and financials lead the gains while industrials as well as consumer durables drag today.
The L&T stock slides after the company fails to meet profitability estimates due to legacy projects. The company, however, reports strong order inflows and ups its order intake guidance.
The Street stays divided on Dr. Reddy's quarterly performance as most of its beat is driven by sales of the Revlimid drug. And the CEO of the company, however, tells CNBC-TV18 that he's confident of clocking healthy growth and meeting the margin guidance. The stock rallies.
PB Fintech jumps after it gets into the black. Voltas gains on a healthy show by its core unitary products business. M&M Finance bucks up on beating estimates and a good asset quality show, while an all-round heady performance boosts KEC International.
And the government cuts the import duty on mobile components from 15% to 10% to support its Make in India initiative. CNBC-TV18 learns that import duty rationalization on over 40 products is on the cards to aid domestic manufacturing. Hello and welcome. You tuned into Business Lunch. I'm Nisha Podar, and with me as always is my co-anchor Pavitra Parekh. So Pavitra, markets looking quite positive at the moment with two very important global as well as Indian, factors really playing on the market. And the way our markets really opened today, from flat to negative bias on key indices, it didn't look like that it's going to have this kind of a showing. So Nifty 50 at this point, 21,680 odd levels. Remember, it's down by about 60 points from the highest point of the trading session, but still going strong at lunch hour. We talk about Sensex, about 550 points that have been gained in that particular index. Bank Nifty is showing outperformance to the key indices today, 1.5% almost kind of gains. And mid-caps, they have been resilient throughout. In fact, they were the ones which opened in outperformance mode to the key indices today and has sustained a rally of over 1%. Advanced decline ratio, no complaints there. Very healthy and strong market because of all pockets being really participating. But really, it's pharma as well as the financials which are really giving that uplift to the market. But what's not doing well is some of the stocks related to the pressure from the earnings like L&T, the big boy, and also the consumer companies, the consumption companies are a drag today.
Oh, absolutely. And the PSUs, right, which really stand out. They've obviously had a solid run. But today, that is the pack which is a little bit sitting out of this big move that we're seeing on the market. But this is a day when you're seeing very good participation across the board. Those big weights, Reliance and HDFC, really coming to, support the market once again. So those two doing well. The advanced decline is very solid, over 2:1 right now. And, if you look at the PSU Bank Index for this week, that's what, 3 sessions so far, it's up around 4.5%. So it's seen a big move over there, and that really continues. Names like SBI continue to pile on to the gains. And then in the mid-cap space, that entire pocket is very, very, is very active right now. So you have names like Indian Metals up 14%, Voltas, PB Fintech. I'm just naming a few of them, but there are a lot of earnings reactions coming through. You also have some of the other new age companies which are surging, perhaps after PB Fintech's, turning profitable. So you have Zomato, Fino Payments Bank, all of these doing well. And on the downside, like I mentioned, it is some of the PSU names. So NTPC maybe a little bit lower. You have BPCL, but these have had, unbelievable runs in this year so far. So that is what's happening with the market. We will keep getting back to this, but let's kickstart the show by talking about L&T because that is the top loser on the Nifty, like Nisha was mentioning. So Vivek is here with more details on the numbers. Vivek.
Well, absolutely right. So L&T, when you're talking about the numbers, it seems to be that quarter after quarter, the kind of results that the company is showing is repeating itself. So revenue, top line is quite strong. Order inflow is exceeding what the management also had guided for. But what remains muted is the core margins. So when you're talking about the P&L itself, revenues above our expectations on the back of improved execution momentum as far as the infra segment is concerned. Now coming to the margins, that's where the disappointment lies. Core margins at 10.5% versus what we were anticipating of close to 11%. On the back of that, profitability lower. Now let's come to what the management guidance is. Management guidance was around 12% of order inflow for the entire year, but the management told us yesterday that they are likely to exceed 20%. Talking about the revenue guidance, 12 to 15% is what the company had guided for. Company sales, they are likely to clock high teens, so likely to go ahead and exceed the revenue guidance. Now talking about the core margins, management at the start of the year gave a guidance of 9%. They trimmed it mid-year to 8.5%. Yesterday, a further trimming down. Now they expect to close FY24 in the core margins between 8.25 to 8.5. So, that seems to be the only disappointment as far as L&T is concerned. Now, coming to the ordering activity, domestic ordering momentum expected to slow down. The election code of conduct comes into effect. Along with that, next couple of quarters, they do expect some softness as far as ordering momentum is concerned. Middle East continues to remain quite robust, and the order pipeline there is something that continues to remain very strong. So the hydrocarbon segment continues to fire on all cylinders.
Unlike order inflow, where a couple of earlier wins or later wins can move the needle, revenue is fairly set because we know what we need to execute in the last 3 months. So my guess is, I think, as compared to 15%, we will outperform that. And just as a landing place, I think I'm assessing that to be more closer to high teens. We will do all our best to see how far we can improve, but it appears to me it will be high teens. My sense is we will be at similar levels as we close this year, and it is possible that given the dynamic that I spoke to you about, it could fall between 8.25% to 8.5%.
All right, Larsen and Toubro really shaving off 40 points from Nifty 50, the single largest dragger today. What's doing well is M&M Financial Services, almost 4% up in trade and is surging on an earnings beat from the company. Our in-house financial services expert Abhishek Kothari is right here with more details on the numbers and what it means for the investors and the stock movement. Abhishek, tell us.
Well, to begin with, the earnings beat has been on NI and PAT, and the asset quality improvement is what Street has loved in M&M Finance. Management guidance has been tweaked. The ROA target that they had set out earlier of 2.5% in FY25, management says that now it's tough to achieve due to weak net interest margin. So they believe that net interest margin could get softer going ahead. In terms of ROA achievement, they will now focus on other income as well as lower credit costs, which will drive the ROA. They have tweaked expected credit loss or ECL assumptions. So in their secured portfolio, they have withdrawn 86 crore of provisions, and that is what has led to ECL decline or ECL provisions decline in this quarter and help the PAT this time around. So in Q3 FY24, net interest margin is at 6.8% versus 6.5% in the previous quarter. One of the rare lender to see a 30 basis point increase in net interest margin on a sequential basis. Asset quality has improved. Gross NPA ratio is at 3.97% versus 4.3% in the previous quarter. One of the best gross NPA ratio in last 34 to 36 quarters, so about 8.5 to 9 years. However, take it with a pinch of salt. They have stopped reporting as per RBI's requirement. So if at all they had reported as per RBI's requirement, the gross NPA would have been higher by 100 basis point or 1%. AUM growth is steady at 17.8% YOY and 2.5% sequentially. What you saw in this quarter was the more of disbursals going into AUM because disbursal to AUM ratio increased to 72.5%, which is higher than product tenures of housing finance as well. In terms of P&L performance, both the NI and PAT is a beat on our poll. Back to you.
All right, Abhishek, thanks a lot for getting us all of those details. In fact, earlier today, we also spoke with Ramesh Iyer, Vice Chairman and Managing Director at M&M Financial, on how they really read their numbers and why they stopped giving the asset quality disclosures as per the RBI norms. Listen in to what he had to say.
I think it would be probably 1% higher than where it is. So the 4 would have looked like 5. Very important to see that the total provision that is required under the IRAC norms are lower than what we are carrying as an India's provision. That's the reason we don't require to make any additional provision.
All right, moving on to the energy space now, and Tata Power has requested the Maharashtra's Electricity Regulatory Commission for a tariff hike. Now, the proposal seeks an average 12% hike, citing increased average revenue requirement of 0.88 rupees per kilowatt hour. Rachna has more details on this and joins us with all of them. Tell us, Rachna.
After maintaining the same price tariff for almost 4 years, Tata Power has now proposed a hike in their price tariff. However, this proposal, if it gets approved, will make electricity for slum dwellers and low-end consumers more expensive. The proposal has been submitted to the Maharashtra Electricity Regulatory Commission. Under this proposal, price of customer category using 0 to 100 units has been hiked from Rs 1.65 to Rs 4.96 per kilowatt hour. Customer category of 101 to 300 units is being proposed to be priced at 6.97 rupees from the existing price of rupees 4.2, and for 301 to 500 units, price is being proposed to be at 8.4 rupees from the current 7.65. On the flip side, the company is suggesting a decrease for the customer category of 500 units and above from rupees 8.35 to 7.94 per kilowatt hour. Tata Power justifies this proposed hike as an effort to rationalize prices, emphasizing that rates have remained unchanged since before the pandemic started, whereas other power distribution companies had increased their price tariff last year, but Tata Power did not. A company spokesperson told CNBC-TV18 that the intention is to address the unchanged prices and reduce the substantial difference between the lowest slab and the highest slab. The proposed rate aims to bring down this difference from Rs 7 to Rs 3. However, the proposed hike also impacts residential customers in the below poverty line category, with rates increasing from Rs 1 to Rs 1.89 per kilowatt hour. This could potentially affect slum dwellers and low-end consumers in the city directly, as their bill could see an increase of almost double.
All right, Rachna, thanks a lot for getting us all of the details on this story. But we need to get into a break now. When we return, we're going to get you a roundup of all of the pre-budget session, what is really expected ahead of that. So stay tuned. We'll be back in 2. Welcome back. You're still tuned into Business Lunch here on CNBC-TV18. By the way, for the markets, it's still holding up very well, 170 points higher right now. And the mid-cap index has moved up even more. So if you take a look at the mid-cap index, it's now up almost 570 points. And, you're seeing a lot of activity over there. Anyway, it was, faring a lot better than what's going on the frontline index. But both the mid-cap index and small-cap end of things are looking very solid right now, which is why the advanced decline has also improved a fair bit. But let's quickly just talk about Ambuja Cement. Now the numbers just came through a while ago, and there has been a bit of a slip in the stock. So Nigel is here picking up some more details on this. Nigel.
Well, that's right. Ambuja Cements, initially we did see a sharp downtick on the stock, but the reason that the stock has seen a good recovery because it appears there is a bit of a one-off that's played out here. And I say this because the volumes are in line. And they have said that the purchases of stock in trade, that's seen a big jump up. It's up close to around 200% on a year-on-year basis. And they've mentioned in their press release at the bottom out there that for Ambuja standalone, 12% of the clinker capacity of Ambuja standalone was under planned maintenance. So that could be one of the reasons why, in fact, the cost is so high. And they've also gone on to say that the benefit of this will accrue in the coming quarters. So that's the key reason that there is a margin miss. Otherwise, these numbers look more or less in line with what, we were working with. The benefits of this will flow through. So the reason that there has been, a bit of a spike up in terms of purchases of stock in trade is because of this. So just want to highlight it to our viewers. It's not a volume miss at all. The power and fuel cost as well have come down. So we were wondering why exactly there was a bit of a miss. And that explains why the stock, after seeing a bit of a downtick, it's seen a good jump up from the day's low. So we wanted to make that point clear to our viewers because initially it appeared like it was a big miss.
Yeah, it's 1.5% from the lows.
Yes.
Nigel, thanks a lot for getting us all of those details. Important clarification there on Ambuja Cements. But let's now move on and talk about the latest from the budget session of the Parliament. The budget session of the Lok Sabha began with President Draupadi Murmu addressing a joint sitting of the Lok Sabha and the Rajya Sabha, where she said that Make in India and Atmanirbhar Bharat have become the strengths of the country's development journey. Prime Minister Narendra Modi to address the media ahead of the big budget session. So let's listen in to what he had to say.
सभी माननीय सांसदों से आग्रह करूंगा कि आप इस अवसर को जाने मत दीजिए, उत्तम से उत्तम परफॉर्म कीजिए, देश हित में उत्तम से उत्तम अपने विचारों का लाभ सदन को दें और देश को भी उत्साह और उमंग से भर दें। मुझे विश्वास है, आप तो जानते ही हैं कि जब चुनाव का समय निकट होता है तब आमतौर पर पूर्ण बजट नहीं रखा जाता है। हम भी उसी परंपरा का निर्वाह करते हुए पूर्ण बजट नई सरकार बनने के बाद आपके समक्ष लेकर के आएंगे। इस बार एक दिशा निर्देशक बातें लेकर के देश की वित्त मंत्री निर्मला जी हम सब के सामने कल अपना बजट पेश करने वाली है।
All right, that is Prime Minister Modi speaking earlier this morning ahead of the big budget. But staying with the interim budget, Nisha is here with what are the details and what you're really picking up in terms of the expectations from deal makers, from investors. So what are they expecting this time around?
So yes, I have spoken to a lot of deal makers as well as the investor community, which includes the VC as well as the PE community, and they have key expectations from the budget, and I have collated that list of their key wish lists, mostly on the lines of simplification in deal making, especially tax parity or relaxation, as well as some measures to boost investments. Wish list includes rationalization of capital gains taxation for the domestic mergers of foreign companies, including the companies listed in the IFSC that are, remember, owned by Indian investors or the corporates, to allow greater flexibility for acquisitions as well as overseas listing. Now, also to encourage the Indian IPO market through ease of listings and transaction, as in terms of the taxation, with a focus on the need to harmonize the capital gains tax rates between the residents as well as the non-residents. They also have demanded a relook at the ongoing demand, which has been pending for many years, of direct overseas listing for the Indian companies to list overseas by not having to list in India at first. Now, measures are also required to enable and boost the domestic capital in private equity and venture capital, to boost the domestic pools of capital to fuel our growth with our own investments. And next, some sort of uniformity on taxation rate for all the securities in listed as well as unlisted space has been a long-standing demand for the domestic investors, and that has been pending. Also, the taxation of ESOPs at the time of sale of shares instead of the issue of shares is also a big ask which has been pending. And on my list, I also have this expectation of treatment of management fees as cost of investment. Many investors are keen on the startup space at an early stage and seek relaxation of the conditions to really qualify as a recognized startup with DPII team. And the industry also seeks a big support from the finance minister on RBI circular on investments in AIFs, in which, remember, RBI has put restrictions on the regulated entities or REs on the investments in the alternatives space as well. So that's the summation of the big wish list from the union budget.
All right, so we'll have to wait not too long to see if this comes through, but hopefully maybe, in this one, or else maybe in the July budget, right? Because this one is a vote on account. So that is the wish list. Nisha, thanks for bringing us all of those details. We are going to get into a short break now, but like we were mentioning, there's also a big global cue to track, which is that the Federal Reserve's decision is expected later today. We're going to bring you all of the highlights from the CNBC Fed survey when we return.
Welcome back. You're watching Business Lunch. Now, the Federal Reserve's decision is expected later today. All eyes on that one. According to the CNBC Fed survey, only 9% respondents see the Fed cutting the rates in March, while June is when 70% respondents believe that the rates will go down. CNBC's Steve Leisman gets us a wrap of all the highlights from the CNBC Fed survey.
Contrast to the market's aggressive outlook for Fed rate cuts this year, respondents to the CNBC Fed survey see fewer cuts and starting later. Just 9% predict a March cut. That rises to even money for May. Only in June is there a majority of 70% looking for a rate cut, while futures markets have priced in almost 6 cuts. Respondents on average see just a bit more than 3. The Fed is expected to end quantitative tightening, that's the reduction of the balance sheet, by November. Meanwhile, the probability of recession remains elevated, but it's fallen to 39%. That's the lowest level since the spring of 2022. It looks like the 25 respondents on average are forecasting the Fed will cut rates at an every other meeting pace, and that would begin in June. You can see the up and down there starting in June, then September, and then December. While respondents predict a cautious Fed, on balance, I think the Fed should be a little bit more aggressive. 56% say the bigger risk is that the Fed cuts too late, while 44% say the risk is going too early. Joel Naroff, president of Naroff Economics, says there's little reason to expect a major slowdown in the economy, so the Fed will likely not risk the gains in inflation it has made by easing prematurely. Recession probabilities fell for the second month in a row. It fell 2 points to 39% from a high of 63 in November. The probability of a soft landing remains unchanged at 47%. Now, it's fairly typical for this group of Fed watchers, economists, and strategists to be more closely aligned with the Fed's own outlook than with the markets. The question remains, who has this right and how much it matters? By 2025, 2026, the market and the survey and the Fed all converge towards the same 3.3, 3.5% funds rate. But it looks like, guys, there's going to be some back and forth and maybe some tussling along the way.
All right, Steve, thanks a lot for getting us all of those expectations and the details of the Fed survey. But with that, we're going to wind down on this edition of Business Lunch. From Nisha, me, and the entire team, thank you for tuning in. We have Midcap Radar up in 2.